I'm going to explain where to put your stop when day trading. This is a very common question among beginner traders, and honestly, even once you're trading for a while, it's always a thing you battle with. Is my stop too tight? Is it too big? Where do you put it? It's always a constant battle. Eventually, you kind of learn always where to put it. There's always a constant. Um, is it too tight, or should I give it more room? That's the battle you're going to be facing later on once you kind of figure out where you're going to put it. But if you're a beginner, watch this video. I'm going to tell you where you kind of should aim to put your stop when you're taking trades. So I'm going to go over a trade I took on Friday. Here is the trade. I bought puts, which means if the action, I'm trading options. If price action goes lower, I make money. The opposite of calls, which is what normally, if you're buying stock, going long, if it goes up, you make money. So I'm buying puts. So if it goes down, I'm making money, just so you guys can know. Reversed, not long. So where did I buy? I bought right here at the 1026 candle. This is a very common setup. I'll watch my last video. If you guys are interested, I trade this setup like every single day. This past week, I actually had a 100% win rate, which was great, obviously. And that's not normally common because in trading, you have to be a good loser. But besides that, where do you put your stop? So as you can see, I bought right here into the lower high, which was I was assuming. And what was I doing? I was risking off this level. But you have to give it a little bit of buffer room, so a little bit of room. So more like right here was my stop. I'm buying on options, so it's not to a pure science. Well, if I was going short on the stock, I would know to the penny it's right here. On the option, it's a little bit different, but pretty much it was in this area. So if it got to this area, I would stop out and I would sell for a loss. What a stop is pretty much when you're buying, let's say on options, or let's say you're going long, you buy, and then you have a sell order attached, or you could put in the order after, which is pretty much if it hits that level, you're automatically going to get taken out for a loss. Same thing, let's say you're taking profits, you have another sell order at a different location, that will take profits for you and cancel the other one. It's kind of, you have them linked together. At least on Thinkorswim, that's how I kind of do it. So what happens is I'm buying and I'm risking off this level. So let's expand this a little bit. I'm risking off this level. So I knew it was 40 cents, right? It's 40 cents, or let's see, let me go right here. Probably a little less. It was 30 cents to the actual spot, and it was 40 cents on the sorry guys, I'm having a bit of a brain fart. 40 cents on the kind of buffer zone was the area. So I knew, hey, I'm going to be risking. If I'm risking that, I know I want to make at least 80 cents. Just to keep it simple, we'll keep it in stock terms to keep it just simple. I don't want to overcomplicate things. So I'm risking 40 cents to make 80 cents, which is 2 to 1 risk to reward. That's kind of how I would do it. I would say this is where I'm going to put and then I'm going to put my stop above somewhere that would signify to me that I'm wrong in the trade. For example, if I'm taking, let's say I'm taking this trade right here, just another spot, just so we can show you one that works and one that doesn't. Let's say I'm taking this trade, some calls, I'm going long, so I'm buying. So I'm going to buy right here, right? I'm going to put my stop most likely under here. It's a bigger stop, so I'm going to put my stop. Let's say I bought right here. I'm going to be risking 40 cents to make 80. So that would work. That trade actually would work, as you can see. But let's say I was risking more. Let's say I wanted new highs. Let's say I wanted to sell into new highs. I wanted a 4 to 1, 5 to 1. I wanted a big winner. I was expecting new highs. Once it broke through here, as you can see right here, once it breaks through, my sell order is going to take me out right here. Obviously, there's going to be a little bit of slippage, especially in a big move, a big candle like this. But that's when I want to get out of the trade. That's when my sell order is going to take me out. It's a hard stop. Hard stop meaning it's in the system. I'm putting a sell order in that will automatically take me out. And that's really it, guys. That's kind of how you know more or less. You want to put your stop where you no longer will be right in the trade. That's where you want to put your stop. I don't want to buy right here. I don't want to buy right where I have circled. I'll circle it again. I do not want to buy right here and put my stop right here. I want to put it where I know if I'm wrong, it's where I'm going to be wrong in the trade. I no longer want to be in the trade. So I want to put it down here. And I have to understand also the risk to reward. For example, if I'm taking, we're just going to go through another one. If I'm taking, let's say, this trade, oh, I am sorry about that. If I am taking, let's say I'm taking this trade, this one's going to be a little bit harder. This one I might have to say, hey, instead of risking all the way up here, I might risk above, right above here, you know? But that's a bigger risk. As you can see, you're getting in, you have to risk 80 cents, you gotta be able to make $1.60. It works out, but that's just kind of how you have to look at it. Where am I risking? You know, it's a lot easier to take this trade right here. Sorry, so many lines, guys. This trade right here, as you can see, buying puts, and you could say I'm going to risk a little bit higher than this level. I'm going to risk right up here. You know, that's a little bit easier. Those risk points are a little easier. It gets more complicated. Obviously, there's a break and retest this strategy if you're buying in right here, but you would have to almost be like, hey, I'm going to risk right above here. You can't risk. The truth is, on this trade, if you're buying puts, you're going short. You can't risk here. That's just way too big. Unless you're in like a swing trade or a bigger trade, but you can't be risk for a day trade. That's way too much risk. I mean, that is $1.45. It's just way too big a risk. Yeah, you could have got 1-to-1, but it's just not feasible. I don't feel like, unless you're swing trading. So I hope you guys enjoy this content. If you have any questions, please leave it down in the comments, and please subscribe for more content like this. Thank you, guys.